world economics is just the global subject. It's the most abstract subject that exists in terms of economic theory. As you know, economic theory, economics is a sort of a laddering, a sort of a ladder, I think that is the word, in science. It has all types of levels and types of directions in economics involved, starting with microeconomics through mesoeconomics, medium economics, macroeconomics, world economics, and then we've got all other many miscellaneous sciences in economic theory, which is very difficult even to enumerate. For example, institutional economics. Have you ever studied institutional economics?
No.
You do not study institutional economics. This is an unfortunate thing, but it is also very interesting. So specific names we have for all those economic things in economic theory. And world economics, I'm sure you've studied world economics at least, or international economics. And from what you've studied, you should have understood that world economics is the most abstract subject ever. It has absolutely no concrete basis, which is very Earth-like. We cannot speak about world economics as something we usually have on the platform close to Earth, so to speak. You will have to go to stratospheric heights in world economics to understand the things that are going on. And it makes it difficult, and it makes it not quite understandable why we needed, actually. I do not know why we needed this world economics, because it's a mystery to me. As a subject, international economics or world economics is quite vague. You cannot think of anything which is really close to the real life we have in this country, for instance. Usually it is much about the economic theory behind international trade and why countries and people trade with each other. That's how it all started. And the thing which we're going to study deals in particular with that sphere of economics, world economics, at which price people trade and countries trade. What kind of basics can we, how can we actually lay the foundation of that theory in terms of global economy and global economic relations? We cannot just put each and every country together and say that this is world economics. It would be only numerically. We can understand the global economy in terms of GDP, but this is not the real sense of what should be learned, at least, in world economics. But the prices involved in this sphere and international economic relations, international trade relations, basically, division of labor, are something at least we can build our foundation in this subject. And I'm not going to dwell into much theory, because many economists did a lot to contribute to global economics and international economic relations, such as Adam Smith, David Ricardo, Karl Marx, John Maynard Keynes, many others. They all contributed to this idea and to this notion. They We actually study all those works still today, and it makes it quite an interesting piece of reading, especially the basics, perhaps. But in order to be more concrete, in order to understand the truth, sense of what you're going to do, you got to at least understand what kind of prices we have in the global economy. And that's the most interesting part. They change every day, perhaps excluding only the weekdays, like these, for example. Weekends we use only to analyze the statistics in order to build strategies for what's going to happen on Monday. Because on Saturdays and Sundays are national holidays, foreign exchange, international markets, financial markets do not work. The exception is only the crypto market. This market works 24 hours a day, 7 days a week, 365 days a year. So that means each and every minute and each and every second, if we choose, for instance, Bitcoin or Ethereum, you see, they are traded now. These markings, you see, green, red, red, green, they change colors. That means the market is open, although today is Saturday. But cryptocurrencies are being traded. USD coin, Bitcoin, Ethereum. In the past 24 hours they changed and they made some gains. That means the market is working. Only the USD coin, which is a stable coin, part of the stable coin diaspora of cryptocurrencies, it actually lost 0.02% of its value in the past 24 hours. But all other things, Bitcoin for instance, it works. If I take the cryptocurrency market, I will see that it's going to work. You see, it's November the 5th. It should have been a weekend, but it's still working. And the price of Bitcoin goes down at this particular hour, this particular minute. November 5th, 3:35. 3:35, that means it's somewhere in the United States right now. Before we start doing and understanding those prices, I would like you to register with this investing.com website. Usually we register by using our Google accounts. For example, I personally just entered this website. I signed in using my Google account. I used it, and here and it's me. Here you see my name. This is my page. Why is it important to register here? Because everything you will do, when you will draw graphs, when you will do some changes to your analyses, if you want to save them, if you would like to use them home, for instance. If you leave this country and go abroad, you will take it with you also, and you do not have to have a special computer. You will not have to take it with you. You will just go to the country of your choice next day, next week, next month, next year. Open your page in the internet and start using it, and everything will be saved there. So it's a very important thing to get registered on this particular website. What kind of website is it? Actually, this is a very useful piece of information. Statistics for everyday financial activities. Because we have to deal with those quotations, those marks, those indices and ratings. We live in the world of ratings and indices, and they change every time we switch on the financial markets. We listen to the news and we see that something changed already. We listen to some politicians saying something, and this already causes dramatic changes to world prices, to exchange rates. It makes difference when you see what you're going to do and what you're going to see in those financial markets every time you go on the web. Of course, there are other financial sources and financial resources. For instance, Refinitiv gives some sort of financial information, Reuters agency, but those packages are paid for packages. You will have to pay for using their databases. For some financial analysts, their statistics, Refinitiv statistics or Reuters statistics, that payable content is very valuable, especially if you deal in billions or millions of dollars of investments. But if you are a simple trader on the financial market, it's quite enough to have a sort of a database which is investing.com or the platform MetaTrader platform 5.0, for instance, which is a basic platform for trading in each market that we will learn. What are those markets? Financial market is a very structured thing, and each of these structure parts deal with specific good or at least something. It may be an index, it can be a commodity, it can be a currency, it can be a cryptocurrency. Everything that is traded in the global finance can be found here. What that is, for instance, Forex market. I think this is one of the famous market in the global financial industry. You cannot, although, buy a specific currency. A specific currency is not traded by itself. You will have to deal in pairs of currencies. So, for instance, if you would like to buy some rubles, it does not mean that you will actually buy them. This currency exists in a country such as Russia, because Russia is the country of ruble. Yeah, ruble is the national currency of the Russian Federation, and it is stated in its constitution. And the Central Bank of Russia is responsible for keeping it stable, although it's doing a very bad job at it to stabilize this currency, because for the past 30 years it actually lost many times over its value against the US dollar, although dollar is also not a very stable currency like we are told by some media, propagandist media, but at least it is a more stable currency than the ruble. If you would like to trade in rubles, you do not trade in rubles or in US dollars. You will have to trade in pairs of currencies. And what are those pairs of currencies? For instance, the most important currency pair, I believe, would be euro dollar currency pair. You see that most quotations and world prices and world quotations actually are the same thing. World quotations or world prices, it's just a matter of the subject or the matter of the commodity that you're going to trade. They are traded directly or indirectly, in direct quotations and indirect quotations. Euro is traded to the US dollar in a reversive quotation. It's a indirect quotation, or reverse quotation actually. Mostly we trade in direct quotations, of course, like Russian rubles, for instance. Russian ruble is traded to the US dollar in a direct quotation. That means ruble is being quoted to the US dollar. But the euro is traded in a reverse quotation to the dollar, and that means the dollar is traded against the euro, here in this particular example. That means when the dynamic shows that something it goes up, that means euro is going up in its value. But when we see that in US dollar to ruble quotations the dynamic goes up, that means dollar gets stronger and ruble gets weaker, right? This is a reverse dynamics or reverse quotation. Understand what I mean? So here, usually when we trade in something, we expected, for example, if you buy something in the market and you would like to take profit out of your deal, that means you buy it now, you expect something to grow in the price and then sell it. Is that clear? At least that is clear, right? But if something goes down, euro, for instance, was going down starting from the spring. After the United States Central Bank, the Federal Reserve, started increasing a key interest rate. And everything started going down. In particular, that was the euro, and now the euro is traded below parity to the US dollar. The euro is weaker than the US dollar just because the United States decided to increase its key interest rate. Why did they do this? They did this because they want to fight inflation. After the pandemics, and during the pandemics, the government stimulated their economies by issuing more money and lowering interest rates down to zero. Some of the governments, some of the central banks did really introduce negative interest rates. For example, Japan and Switzerland. They introduced negative interest rates in order to stimulate the economies. But that was even before the pandemic started. When the pandemic started, the European Union, the United States, all of them started lowering their key interest rates. In emerging markets, all across the globe, in order to, they thought that this is the best way to stimulate the economy. Because the idea, for instance, at least some of the economists say so, like John Maynard Keynes. If you read his book on general theory of employment, inflation, and money of 1936, he says there that you should actually stimulate the economy by issuing more money, lowering key interest rates, and providing the banks, commercial banks, with additional cash, so that they do not go bankrupt. And what we see here, actually, let's see what happened actually in the pandemics. That was a very interesting thing, a very interesting trading opportunity, at least. That sort of fluctuation in just a couple of weeks, actually, it's a 2 to 3 weeks in time. Euro was at its height here at $1.14. It means that in order to buy €1, you had to have $1.14 or 15 in order to buy €1. Understand? And that was on March the 9th. March 9th, 2020. Right before the lockdown.
May I make it more much?
And then, when lockdowns were introduced, when lockdowns were declared, it was by March the 20th that the euro dropped down to $1.06, $1.07. It almost fell to parity, but not exactly to parity. Actually, it dropped down to parity later on, and that was here, September the 27th. The euro actually reached its lowest point in at least a decade. And if you know something from history, when the euro was just introduced in 1999, it was introduced in digital form, in electronic form, not digital. Digital euro is out of place even today, but it was introduced in electronic form on January the 1st, 1999. And it started at parity first, but then it went down, and it was like 0.86 USD cents actually to pay for a euro. So it was a very weak currency, and people thought that this currency is not going to survive. But later on it started increasing in value, and by the time of the global financial crisis in 2008, the euro reached its highest point. I believe it was something like $1.50 a euro. It was the strongest position, the strongest point for this currency just before the financial crisis. Financial crisis changed everything in the destiny, in the destitution of the European currency, of the single currency. They had to create a special stabilizing mechanism, European stability mechanism, European monetary stability facility, and many other sorts of things. Before the financial crisis, the total amount of euros issued was less than 1 trillion euros. Now it's almost 10 trillion euros. So in just 12 years, they printed over 9 trillion euros of this currency. And the European Central Bank became a huge financial institution with debts of some of the governments like Germany, Italy, France, Denmark. Debt is supposed to be that sort of an instrument, they say, the instrument of harmonizing countries, bringing them closer together. That was an idea of Alexander Hamilton. Alexander Hamilton, do you happen to know who he is? He was actually, because he is dead already. Alexander Hamilton was the financial minister, the Minister of Finance of the United States, when the United States was just created. So, after they introduced their constitution, after they had their constitution in 1776, they had a Minister of Finance, and his name was Alexander Hamilton. And his idea was that the United States is a combination of states, clearly, right? For us in Russia, for us Russians, we understand the United States as a single country, a harmonized country, like Russia, for instance, with a single president, common president for each and every issue to decide in this country. But this is not true, or at least it was not true all the time in history. Because when the United States started, they started with 13 states in the eastern part of the country. States like New York, Rhode Island, Maine, and others. Virginia, West Virginia, South and North Carolina. Other states joined the Union later on. For example, Texas joined this Union in 1836. And this state is still today called the state of a single star, a one-star state. The United States bought it from the French in 1836, actually. The same goes for Louisiana and many other states, which number 50 in total, right? The United States has 50 states in it. So, the idea of Alexander Hamilton back in those days, just at the beginning of the United States history, he thought that in order to bring these countries, these states together, in order to make a single and unified country out of those different states, you have to have a common fiscal policy, common budget for everyone, common taxes, and common debt, common obligations, government bonds at the federal level, so to speak. And he started doing that. He started introducing that into practice. What was the result of those debts? You know that the United States is quite a very diverse country, I believe. Still today, and back in those days, it was a very diverse country, both culturally, economically, financially. North states like Maine, Vermont, New York, Philadelphia is a city, the capital, Washington, D.C., Maryland. Those states are northern states, and they were democratic states. You know that the parties in the United States, the major parties in the United States include both Republican and Democratic parties. Yeah? And in order to get something through the parliament, you have to have a bipartisan support of both parties. So, northern states were always democratic, and southern states were more Republican. Still today, they're more Republican. Like Texas, for instance, you do not have to to be a Democrat or a Republican to understand that Texas is a Republican state. And they are traditionalists, so to speak. More traditional in values, more traditional in terms of family values, more traditional in terms of budget expenses. And what are those traditional ideas about budget? Is that you have to have low taxes, no social programs, no Obamacares, nothing in terms of schooling, in terms of supporting social sphere. That's why Democratic Party is called Socialist Party or the Leftist Party, because they're always trying to introduce higher taxes for the rich. They take more taxes from the rich because they want to help the poor people. That's why Democrats in the United States are called leftist politicians or just socialists. Communists like politicians. And in the days when the United States just started its history, it was always the same thing. And the idea was of Alexander Hamilton to unite those countries, to unite those states by using common debt. And he introduced government bonds, federal government bonds. They are called treasuries today, T-bonds. Treasuries is the most important bond market, the most important financial market in the world, is as a single sector. Yeah, it's a very important market for the global economy, for specific countries like China, Japan, Switzerland, Great Britain. Many countries in the world buy these T-bonds still today, but it does not mean that they integrate with the United States. But Alexander Hamilton believed that that was the real instrument to unite the country. Southern states were very, very rich states, like Texas, Louisiana, because they produced cotton and they exported it to Europe and made huge profits out of it. Northern countries did not have the real industry. It was only later on in the development of this country, by the end of the 19th century, when they started opening up mines, iron mines in Detroit, so that they created that industry, automobile industry, which later became the world #1 industry, automobile industry in the world. Yeah, the big three, Ford, General Motors, and Chrysler, became the automobile capital of the world, the big three. And still today they are one of the most important companies. But that was by the end of the 19th century, and Henry Ford was the person behind that sort of development. That was later on when the country was united, at least, in some sort of thinking, in some sort of idea. But here we speak about just the beginning of this country, and it was not very, it was a very diverse country. The Civil War, which began in 1863, was the last drop of patience of the southern states. As you know, southern states did take advantage of forced labor, right? You understand what I mean? They made use of forced labor, and they were happy about that because it was cheap. You did not have to pay much in terms of salary to these people. They were slave owners in Texas and Louisiana, in Atlanta, and they were very, very rich. They produced cotton and exported it to Europe. They took huge amounts of profits out of that. They paid their taxes. Northern states were indebted states, and the southern states had to pay for their debts. They had to cover their financial and debt obligations. And when President Lincoln when he abolished forced labor serfs in this country, they thought that that was the last drop of patience for them, and the war started. The South was defeated. The system almost collapsed, so to speak. And it was at that point that the idea of Alexander Hamilton was abandoned as well. So they decided to have their own independent budgetary systems. And still today, the United States, in terms of budget, is not a federal state in the real sense of the word. Russia is a federal state in terms of taxes, because when you have, for instance, Tatarstan or Moscow or St. Petersburg, and if they have debts, if they have a budget deficit, this budget deficit is financed at the expense of the federal budget. Expenses and revenues and expenses of the budget are being balanced through the federal budget. In the United States, this does not happen at all. If someone, for example, California, has its debt defaulted, it's going to pay for its debts individually, and nobody is going to pay for them. For example, in 2008, 9 states out of 50 declared bankruptcy, including California. California at the time was ruled by Arnold Schwarzenegger. And Arnold Schwarzenegger was a Republican, which is a surprise, which may come as a surprise to you, because Republicans actually never rule, usually do not rule this state. California is a predominantly democratic domain. But Arnold Schwarzenegger won the elections not because he was a Republican, of course, but because he was Arnold Schwarzenegger. That's why he won the elections. But he held that position only for 4 years, because during the financial crisis of 2008-2009, global financial crisis, subprime mortgage crisis, he failed to balance the budget of this great state, and the state had to announce bankruptcy. And who do you think paid for their debts? The federal budget did not pay for their debts. They had to scratch up their heads in order to rule this out, and they actually later on did this. Actually, in terms of economy and GDP, if you take California as a single country, it would take 8th place in the world. It's the 8th largest economy in the world if you separate it from the United States. And it's the most populous state in the United States. At 42 million people, this is the most popular and populous state in the United States. And their tax rate, income tax rate, and corporate tax is one of the highest in the United States. It is close to 42% on average. But in Texas, you have to pay only 8% because Texas is a Republican state, and Republicans usually stimulate businesses and neglect social sphere. They neglect education, they neglect social care, they neglect medical care and other things. So Barack Obama, who introduced his Obamacare, had difficulty in order to bring through the Congress his Obamacare law. Joe Biden, a Democratic president today, has difficulty to proceed with that issue also. He has many difficulties in order to push through his laws, legislation through Congress, because the United States is a very polarized country in terms of politics. Why do I say all this? Because politics is also very important for financial indicators and indices. In the early November, what did we expect in the early November in terms of financial markets and industries, financial indicators? We expected two major events. We expected November the 2nd and November 8th. What happened on November 2nd? November 2nd was an event. I would not say that it was not an unexpected event. Many people expected that the same thing will happen once again. And what kind of thing happened once again? Starting from the early January this year, 2022, even before the special military operation, many central banks across the world started to understand that inflation is getting out of hand. And they have to control it, because the United States alone issued over $4 trillion they invested, they made expenses, budgetary expenses, they made investments into social care, into digital technology, into climate change industries, and many other things. Build Back Better program. Then they initiated programs supporting carbon emissions initiatives, and many other things. Infrastructure in the United States is very poor in some of the cities. In Chicago, for instance, they still today use lead pipelines, water supply pipelines. That means they come from the 19th century, and lead pipelines are very dangerous for your health. You got to get other pipelines, but they do not do this because it's really expensive, and they have to invest more money into it. And they try to do this. First it was Donald Trump who issued $2 trillion program to support families during the COVID-19 pandemics, and then Joe Biden came and issued $1.9 trillion more, and then he introduced other social and investment programs, and it added to inflation in the United States as well. At first, nobody cared actually about inflation because it was close to zero, just like interest rates were close to zero, and it made no difference whether they increased or decreased those expenses. They were very happy about taking more debts because you did not have to pay anything for those debts. But later on, when they started feeling in the inflationary pressure in the economy, they thought, the central bank at least thought, that it was time to start increasing a key interest rate. And the Federal Reserve System, Jerome Powell, started doing that. The committee, rate setting committee of the board, of the Fed's board, started increasing their key interest rate. And that was, at this particular point, everything changed. All other financial markets started declining. The markets like cryptocurrencies. Bitcoin hit almost $70,000, just one Bitcoin. Today it's traded at 20,000. It was a direct cause of the Federal Reserve increasing its key interest rate for the sixth consecutive time. And November the 2nd was also that particular consecutive increase in the key interest rate. It had to increase it because inflation in the United States hit a new record. It is a very stubborn thing, as it happened. Before the pandemics, people got used to this idea that inflation cannot exceed 2%, and it was the target. Actually, inflation never hit that target, and the central banks in the Eurozone, in Japan, in the United States, all across the advanced world, they were very concerned about not hitting this target. They were not really happy about that. But now, inflation hit 8-9%. In Europe, it's 10.9 or 7%. So the inflation went crazy, and the inflation got out of hand. It is really a problem because people demand more wages. And if you demand more wages, if you're paid more wages, that means you have a better purchasing capacity, higher purchasing power, so to speak. You may spend more money on some goods, and it drives inflation further. And that means money loses value. So, on November the 2nd, again, the decision was taken, and the United States Central Bank, the Federal Reserve System, declared another increase in key interest rate by 0.75 percentage points. And now it's over 3%. It's getting closer to 4%. That's the harshest monetary tightening in at least 40 years. And the situation is really dramatic. The United States dollar is at its strongest position for the past 20 years. The US dollar was that strong 20 years ago, right before terrorist attacks of September of 9/11, 2001. It was at this particular point when the United States dollar, US dollar, started going its downward slide in the financial markets. And that was it was at this particular point the euro started gaining ground against the US dollar. Right before the financial crisis. When the financial crisis hit in 2008, Lehman Brothers collapsed on September the 15th, 2008. It declared bankruptcy. It filed for Article 11 of bankruptcy legislation. It started seeking for government protection, but nobody helped Lehman Brothers. And this 150 years old bank collapsed. And it could bring the whole economy down with it, because this bank owed money to other banks, and other banks owed Lehman Brothers money to someone else. It's a domino effect. These banks were contaminated, so to speak, and each other bank could contaminate the next door bank, and the whole financial system could have collapsed. The US dollar is also the leading currency in the world, so everything that happened, if something bad happens in the global economy, people start getting scared about their financial assets and they start investing more in dollars and gold. But that was long before the cryptocurrencies actually started doing their work. So, the next most important event that we expect this early November, I said two things we expect, right? Actually, we expect three events to come. And these events include, like I said, key interest rate decision. It was taken on November the 2nd. Then we also are looking for November 4th. It was yesterday. Yesterday, unemployment figures were announced in the United States. And what were those figures for the United States unemployment? Let's see actually economic calendar, because you cannot do that without what happened back then. Non-farm employment. The United States created 239,000 jobs more. The forecast was 195,000. So the United States economy created more jobs than it was expected. The previous figure was minus 192. It created less. That means less than was expected. When the US economy presents that sort of data, when this country produces more jobs than expected, it immediately is immediately reflected in the price of gold. Let's see what happened to the price of gold on that particular day. Gold is a futures market. It's part of the futures market, right? Because in the futures market you trade in something like silver, copper, aluminum, gold, palladium, platinum, oil, natural gas, liquefied natural gas, things such as these. This is the futures market. You trade in Brent, in gold. Let's see what happened actually with the price of gold on November 4th, yesterday. The market is closed. This is understandable because only crypto markets actually work today. Let's see what happened when it was announced. The announcement came. When was the announcement? I need once again economic calendar for this week. The announcement came at 14:30. Right? No. Yeah, 14:30. Non-farm payrolls. 262,000 jobs created in October. Non-farm payrolls, excluding agricultural sector. Non-farm payrolls. And unemployment rate worse than expected, but better than expected in terms of job creation. 14:30. Let's see what happened at 1430. It's here. So the market reacted by an increase in the price of gold. You see, figures for the year's economy, for the unemployment, November 4th. I'm very concerned about this time zone. It is very, very important thing, because if you're looking for an event, you got to be absolutely sure that it's the time you're looking for. I changed it, and everything changed with it. And what about economic calendar? Is it going to be Russian time? It's I need Moscow time, GMT 3 plus 3. 1530, non-farm payrolls, Moscow time, 1530, right? And here, 1530. So that's what I was expecting. The markets, right before this announcement, what did they expect actually, and how they behaved? Let's see. They behaved like this. They were expecting something to come. You see this flat? The price of gold is almost flat at this particular point. Starting this day, they expected something. And what did they expect? They expected this non-farm payroll being issued, those statistics being published. And when the statistics came, the market started moving down. The price of gold hit a new minimum, 1646. You understand? You see this? It dropped. It was 1652 just 5 minutes before the announcement. You see? Just 5 minutes before the announcement, the price of gold was 1653 maybe. It was 1653, 52, well, in that range. Let's say on average, in these 5 minutes, 1520 to 5025, it was 1653. And at the moment this non-farm payrolls announcement came, the price of gold went down as far as 1646. That's the fluctuation. Understand? How much in terms of fluctuation is it? Why the price of gold actually went down? Yeah, that's one of the most important questions to ask at this particular point. What is the reason for the price of gold to go down when you announce unemployment data in the United States? Just a little bit of attention, yeah? So in order to understand what really happened. When the United States creates more jobs than expected, that means what? The year's economy is healthy. And if it's healthy, the US dollar is getting stronger. If the US economy produces less jobs than expected, That means the economy is weaker, the economy is not really healthy, and that it means the US dollar goes down in value and everyone tries to buy gold. It's at this particular moment when people start going into this particular trade deal. Actually, this spring when we did this course, I did not tell you about this strategy. This strategy is called event strategy. You trade on a particular event. This particular event comes at a specific timetable, but that at least I told you about, right? In March, in February, when we had lectures, I tried to explain that to you, or to some of you in particular who attended those classes and those lectures, that we have specific events, and those events include in particular non-farm payrolls. So what this strategy is about? Please memorize that. Make note. Make a note of it. Each first Friday of every month, so on November 4th, on December the 2nd, or October 7th, September 9th, October 7th, November 4th, that's the first Friday of every month. On that particular day, at 15:30 Moscow time, they in the United States, they announce unemployment data. Also, you got to be careful about this 15:30, because Russia does not change for winter time for the past 10 years, for the past decade. We do not change for winter time, unlike in Europe, for instance, or unlike in the United States. But they do change. Understand? So that means this 15:30 before October the 30th was 16:30. Clear? You got to keep that in mind also, because time changes, right? Okay. At this particular point, on November the 2nd, 1525, what do? You buy and sell at the same time. Buy and sell. By buying and selling at the same time, you create a sort of a lock, right? Is it clear? When you open your position, if you buy and sell at the same time, that means you create a sort of a lock. Understand? This is a lock, because when the market actually goes after the announcement, the market may go up or down, because you do not know the statistics being announced. You do not know you may only expect something, but you do not know the actual figure. True? It's going to be announced at 15:30 exactly. So before the announcement, 5 minutes before the announcement, you create a lock. You buy and sell at the same time. And then when the announcement comes, and the announcement came 5 minutes later, the market reacted by going down. The price of gold dropped. This is the drop. Let's see how much is it. How much is it? 1646 and 1652. How much does it make? How many dollars? What's the difference? You can tell. 6.5. 6.5 USD. How much is it? Is it big in terms of a drop or not very big? For this market, it's very big. If you buy one lot of gold, a volatility such as this would bring you it would bring you $650. Is it clear? If you buy one lot of gold, sell, right? Sell. If you sell one lot of gold and it goes down $6.5, it would make you $650. But you have created a lock. That means the position which you open to buy is going minus. Clear? The market goes down and you lose, that is. You lose. But it is a very special thing about the gold market that after going down, it will surely, absolutely surely, I have lots of evidence about that from the past events. It always went up again at the moment when you created the lock. You see? So, when the price of gold goes down after the announcement, which as expected comes when the US economy creates more jobs, because it's healthy, the price of gold goes down. You should close position to sell and try and start waiting for the price of gold going up until that particular point when you created this lock. And when it goes up, when it returns back to 1652, you close the position to buy and take profit. After that operation, you pocket $650. Why should you can wait, of course, right? You can wait, actually. But who did expect that the price of gold would go up? Nobody expected that. In particular, at that particular time, you could try to wait for the things started changing, but actually it was not a very good idea to start waiting for those events. This is a very dangerous idea. So usually people close their position at that particular moment because the market may go down again. So that price increase over to 1675 was really unexpected. And when morning comes, actually, the price of gold may go down again. and it could be just a sort of a correction at this particular point. However, by looking further and going deeper into the analysis, what do I see? I see this support line. I see this level of support at 1619. The price of gold in the past, starting from September 27th all the way through October, it hit 3 times the same price. It touched 1619 and bounced back again. So I project that in the future the price of gold may touch it again and bounce back. Okay, we'll talk about that later on, yeah? We have a little bit of a break.